Okay, Chapter 19, Job Order Costing. So what we're really talking about in this unit and for the next couple chapters here is about understanding our unit costs, or understanding what it costs us to do whatever it is that we do in this business. So why do we need to know that information? Well, we need to know our costs so that we can make budgets, right? We need to know our costs so that we can set the price for our product. We don't know how to price our product if we don't know how much it costs us. We need to do this so we can set targets for our profit. And we need to understand our costs so that we can control our costs, right? So from a managerial point of view, these are all these things. In order for us to plan, in order for us to know to plan on profits, we have to be able to understand our costs so that we can set our price and all that. There are also gap implications in addition to the managerial implications here, because the information that we're putting in here, right, all these inventory numbers that we have, so raw materials, work in process, finished goods, all those inventory things are showing up on the balance sheets. And then once we sell it, it turns into cost of goods sold, which goes on our income statement. So if we're not tracking our costs right, our inventory numbers aren't right, our cost of goods sold's not right, so then none of our financial statements are correct, and then we've got a whole problem. So we look at this here, and we've got job order costing versus process costing. So here in 19, we're looking at job order costing. This is when you track all the costs for a specific job separately. So you would use this anytime you have some sort of unique product. So anything that's custom made, anything that's specialized. So, for instance, when you go to the mechanics, they track the parts that they put in your car separately. They track the amount of time that they spent working on that. Each car is separate. Or if you have a landscaper come, or if you have an accountant or a lawyer, they track how much time they spend on your specific case and charge you that way. So that's what we're going to do in this chapter. In chapter 20, which we're not doing, we use process costing, which is when we have identical products. So everything in that batch is exactly the same. So you do them in batches. So I might be making tennis shoes, but I'm not making a separate tennis shoe for each person. So while I might have different styles of shoes, within a style, every single one is exactly the same. So that's done in batches, and what I really just do is track the cost for the entire batch together, and then just say, okay, this is how much it cost me to produce 1,000 shoes. I divide that by 1,000, and that's how much it costs per shoe. So it's the same idea, except you're just doing it for a bunch of them and then allocating it. So we're going to focus on job order costing. Now, we looked at a lot of these in chapter 18. So here's work in process inventory. And so what goes in for each job, I'm going to track the materials that go in, the labor that goes in, and then I'm going to allocate some overhead. And I'm going to do that for each job that I have. All of those together here go into work in process. When it's finished, it goes to finished goods. And then when I sell it, it goes to cost of goods sold. So this shows the flow of products in a job order costing. And this is pretty much what we looked at in chapter 18. So as we move through here, for each one of these things, there's something that happens that generates the move of the materials. And then we need the journal entries to go with it. So we talked about how the materials physically flow through this, but we need the money to flow in the accounts as well to go with it, and that's what the journal entries do. So there's always something that will start this. Actually, the first thing that we would have, the first step in here, would be the purchase of raw materials. And so there would be an invoice for that. This would look really pretty much just like when you bought merchandise inventory in accounting 1. And so you would have an invoice, and then when the invoice comes on, that would add things into raw materials. And then the second step here would be when the material is, when we actually use the raw materials. So this is what happens when they are going from raw materials into work in process. So what happens is the guy who's working on this job fills out a materials requisition, and when this gets filled out, that's what actually generates the journal entry to move the stuff from raw materials into work in process. So as the materials are physically moving, we need the balances in the account to reflect that as well. And this materials requisition is what will generate that journal entry. And so you can see here, each materials requisition will have a number. It says what job number that's going to, and everything in here can get cross-referenced over here. And so this is the amount that will move from raw materials into work in process over here. And so U. Patterson asked for 15 batteries for job number 27. That's what this shows. And so then when he was working on job number 27, this is what, so here's job number 27, here's the customer. And so we saw this $825, is going out of raw materials. Oops, sorry about that. And it's going into this job right now. And so now this job is keeping track of everything that goes in here. So this materials requisition is what sends it over to here. And so you can see here, this will have 3 different sections. It'll track all the materials that go into this job, all the labor that goes into this job, and then we'll talk about overhead in a little bit here. So if you were to look at these 2 documents together, it would look like this. So here's the materials requisition, and everything's cross-referenced here. So this was materials requisition 342, and this is showing 342. So there's those 2. It went to job number 27. Here's job number 27. It went like that. $825, $825. It goes like that. So all of these things can be cross-referenced. So if the guy who's in charge of raw materials, somebody says, hey, what happened to those 15 batteries? He can show where it went. And then the guy working on job number 27 can show exactly where he got everything and how much it was worth and all that kind of stuff. So that's to make sure everybody knows where everything's going. Okay, now the journal entries that go with this, when I purchase raw materials, again, the document that generates this would be an invoice. And this is stuff that's going into raw materials. So I would debit raw materials inventory because they are getting stuff. And I would credit probably accounts payable. So that looks a lot like when I purchased merchandise inventory before, except now it's raw materials inventory. This would apply to both direct and indirect materials. When I use it, so that was the first transaction, when I use the materials, that is when it's going, so that's the materials requisition, which is what will generate this journal entry. This is when it's going from raw materials into work in process. So I'm going to debit work in process inventory, and I'm going to credit raw materials inventory because it's coming out of one and into the other. That's what I do for direct materials. If it's indirect, it's still coming out of raw materials, but it's going where I'm going to debit manufacturing overhead. And we'll talk about this here in a little bit. Manufacturing overhead for the indirect. Actually, this is both, so I'll just take that off of there. So if I'm taking direct materials out of raw material, it goes into work in process. If I'm taking indirect materials out, it goes into manufacturing overhead. So that's the material stuff. Then we get to the labor. And so here you can see this section of the job cost record, and I can see that somebody spent, I don't know, let's say they get paid $30 an hour. So they spent 3 hours here. Here is the time card record. So whoever this is, let's say this is Hugh or whoever it was again, he'll, this is coming off of his time cards. So you'll be able to track, on this time card, he'll say, I spent 3 hours on job number 27. And so you can track that backwards too. Again, just like the materials, the direct labor goes into work in process inventory. So the time card is what would kind of generate these, but I'm going to debit work in process inventory. In accounting one, when we were paying wages, we would probably debit like wage expense and wages payable. And so that's still going to be my credit, is wages payable. But for direct labor, instead of the wage expense, I'm going to debit work in process inventory. And for the indirect labor, I'm going to credit manufacturing overhead again. So in all of these things that we're doing, the credit's still whatever we were crediting in accounting one, but the debit is now going to go into either work in process or manufacturing overhead. So those are the materials and the labor. So let's just do a couple problems out of the homework for that one. So this company manufactures backpacks, and they want us to record the transactions for raw materials and determine the ending balance in raw materials. So we've got a couple different, so here's my beginning balance, here's my purchases. So these would be direct materials, and then these look like indirect materials. And so these are my purchases right here, and then materials requisition here is where I am using it, right? So this is what's going in, and this is what's going out. So it looks like I bought, when you're putting it in, you don't need to keep them separate. In this transaction, they're putting in the same. I think really, in real life, if you had two different invoices, you would have two different transactions, but maybe they bought these all at the same time. So to put those in, I'll have raw materials inventory, and I purchased a total of $73,200 worth of stuff, these two together. And I think I bought it on account, so I will I'll credit accounts payable 73.2. And then I used some stuff, right? So here's what I used, here's what went out. So the canvas would be the direct material. So I will debit work in process inventory for the direct material, which is $59,000. And I will credit manufacturing overhead for the indirect material, which is the $450. And then both of those things are coming out of raw materials, so that's what I'll credit. And that totals $59,450, like that. And then it says, what's the ending balance? So here's my raw materials. I started with a debit balance of $38,000. What went in was $73,200. What went out is $59,450. You don't have to do a T account with this one. You could just say, here's what I started with plus this minus what went out, and I end up with $51,750. Oops. $51,750, I think, is my ending balance there. All right. So there is the purchase of raw materials. Here's the use of raw materials or stuff going out. Let's do one for labor here. This is Portland glass, so we will assume that the janitor is indirect. We're going to say that the furnace operator is also indirect, and then the glass blower is the direct. So these two things together will be the indirect, so that's $1,480. So I'm going to debit work in process inventory for the direct, which is the $74,000. I'm going to debit manufacturing overhead for the indirect, which is the $1,480, and then credit wages payable. Oops, sorry about that. For the two together, which is $75,450. 480. Okay, so let's do let's talk about overhead here. Now, overhead really goes into two parts. So I'm going to do the first part here, and then I'm going to cut this video off and pick up with the second part. So we've got actual overhead, and then we've got applied overhead. All right. So the actual overhead is recorded when it's incurred. So when I actually pay the bill. So when this is the case, so things that go into overhead would be things like your indirect material or indirect labor, but then also anything like, you know, your taxes and your depreciation and anything that's plant related that is not a direct material or direct labor. So all of these things, we're going to debit manufacturing overhead, like we did here and like we did here, okay? So we're going to debit manufacturing overhead, and then we're going to credit whatever we would have credited before. Before, these would have all been counted as expenses. So our direct materials came out of raw materials inventory, sorry, indirect. So that's our indirect materials. For our indirect labor, which we just did in the last one, we debited manufacturing and we credited wages payable. Other things like taxes. So before, when we paid our taxes, we would debit tax expense and then we would credit taxes payable when they were due. And so now I'm going to debit manufacturing overhead and credit taxes payable. Or depreciation, we would debit depreciation expense and credit accumulated depreciation. So now I'm going to debit manufacturing overhead and I'm going to credit accumulated depreciation. So in all of these, when we're recording the actual expenses, we're going to debit manufacturing overhead and we're going to credit whatever we would have credited before when we were doing them as expenses, okay? So I'm going to do this as I go along all year or all quarter, whatever I'm doing. I'm going to debit manufacturing overhead as I go. But there's a separate process for where I need to estimate and allocate the overhead to the job. So some of these things, like for instance, my taxes, I'm not going to pay to the end of the year. My depreciation, I'm probably not going to record until the end of the year. But I need to build those into the job. I can't wait until I figure out what those are and then go back to jobs I had earlier. So these two things are going on simultaneously. So at the beginning of the year, I will estimate what all my overhead costs are going to be, and I will allocate those to the jobs. I will apply those to the jobs. But then at the same time, I'm actually incurring these actual expenses. And so then I'll have to go back at the end of the year and see if I put the right amount in or not. So this is how it looks for the actuals. That's what we've been doing so far. I'm going to pause this and I'm going to pick back up and I'm going to show you how we apply the overhead.